Okay, thanks, Blake. Appreciate that. Blake was saying no sound. I actually have two areas where I turn on the sound. So let's go back in here. I'm glad Blake brought that up. I was pointing out that yesterday we saw quite the tumultuous fall in crude oil, and one of the things, and let's go move this back. I noted in the room a couple of times for those of us that were taking pot shots at crude oil. You can see here that this get that 1197. We know 1198 is 78%. So it says the Canadian dollar steadies after hitting a 4-month low on oil price slump. The Canadian dollar is a little change against the greenback on Tuesday, steadying after it touched the weakest level in nearly 4 months as a sell-off in oil accelerated. The price of oil, one of Canada's major exports, plunged to lows not seen since November due to ongoing worries about weakening global demand, oversupply, and declines across other asset classes, including equities. The slide in oil prices is delivering a hard blow to the Canadian dollar, said Carl Shimoda, global market at Cambridge. The 1-month rolling correlation between the Canadian dollar and oil rose to 85% on Tuesday, according to Refinitiv Icon data. Currency and the commodity moved mostly in the same direction. As recently as August, the correlation was negative. Optimism surrounding a Brexit deal has had virtually no impact on the Canadian dollar, Shimoda said. Wall Street gave up early gains as a rebound in technology stocks and renewed hopes for progress in trade talks were offset by drops in Boeing and energy stocks. On to the Aussie. The holds gains on China-U.S. trade talk, wage data awash. The Australian dollar and New Zealand dollars were clung to gains. Probably meant to say, like, should surprise they're clinging to gains, but I guess they were clung to gains on Wednesday after signs of a possible thaw in Sino-U.S. trade relations prompted a spot of short covering. They'll both remain within recent well-worn ranges. Figures on Australian wage growth showed some pickup, but not enough to alter the outlook for steady rates. The Aussie held at 72.22, having bounced from a trough 64 on Tuesday on news of a resumption of trade talks between Beijing and Washington. Although an improvement of U.S.-China relationships is positive for the Aussie, it seems unable to move above the 73, reflecting the high degree of market uncertainty, said Rodrigo Catril. From a technical perspective, the odd remains confined to its 70.21 to 73.02 range. The latest news out of China was a mixed bag. With October retail sales missing forecasts, but a better performance from industrial output and fixed asset. The pickup is still painfully slow and did nothing to change expectations for the RBA, and that's on the wage growth that inched up to an annual 2.3%. Forecasts incorporate a firmer labor market and continued modest erosion of slack. Going forward, we struggle to get annual wages growth above 2.25 to 2.5. The data continue to suggest a little larger policy normalization. Australian government bond futures firmed in line with treasuries, partly on wages. The recent sharp slide in oil prices would temper future inflation globally. On to the cable. Sterling catches a breath before the UK cabinet meeting. Sterling steadied after posting its biggest jump in 2 weeks on Tuesday as investors await the cabinet meeting where Prime Minister to convince her ministers to accept a European Union divorce deal. As the EU braces for the biggest divorce in its history, Brexiteers and May's Conservative Party have said they would vote the deal down, while the Northern Irish Party, which props up her minority government, questioned whether she would be able to get parliamentary approval. Canada will meet at 1400 GMT. The outcome of the barometer test on the upcoming parliamentary vote in the government will face to get the deal through, said Fritz Lowe. In early trade, British currency was flat at 29.67 after briefly jumping up more than 1% on Tuesday to 7. Well, currently we're right there at 29.36. We've taken a pretty good little dip. Brussels diplomatic sources had said they feared any delay in agreeing to the text would increase the chances of by May's for the British Parliament, reflecting the growing nervousness among market participants over the cabinet meeting. Implied volatility on the pound, a gauge of expected swings in the British currency, surged. Sterling dollar implied volatility 23% on Wednesday, its highest since Britain's general election, and certainly you're seeing that being reflected here. Boy, you got some good volatility swinging back and forth here. Euro under pressure as Italy sticks target in the euro hovered below 113 on Wednesday as Italy submitted to next year to the European Commission, and traders prepared for economic growth numbers due out later. Major currencies traded in tight ranges, the dollar edging from a 16-month high. Sterling, which surged on Tuesday after Britain and the European Union agreed a Brexit deal, was calm on traders prepared for Theresa May's colleagues. Italy resubmitted its draft budget for next year to the European Commission with the same growth assumptions in the European Union rules. The rally investors in Italian's volatile government kept the euro under pressure. The single currency was flat at 12.80 after trading at 113 late Tuesday. Tu-Lan Wen, the commerce strategist Bank in Frankfurt, said she did not anticipate an escalation of crisis in Italy, but much how the Europeans react. We're in a wait-and-see game. Don't be fooled by the politics of the dollar. All the major currencies, local factors for U.S. dollars or a change in economic fundamentals, said Kathy Lean, Managing Director of Currency Strategy at BK Asset Management. Yeah, she's been a big currency star over the years. Kathy Lean, good solid take on things. I mean, I don't think there's nothing, and I think, to me, I think the dollar's higher. Just that we still have these central banks diverging policy. I see where the dollar would make a move higher. It has made a marginal move higher, but it still hasn't. It is yet extend a whole heck of a lot higher from here. So you can see here we've made a marginal move higher. We are holding above the 97. Once again, I don't know where we're going to get the juice to go higher, but in light of everything that's going on across the globe, especially in Europe, see where there's an impetus, I guess, to go straight long the euro, at least at this point because of Italy. I think if it wasn't for Italy, I think we would have moved higher here in the euro. But certainly that dollar support remains. Lean expects a robust U.S. economy, rising interest rates, and its safe haven status will continue to strengthen. I have to respect the technicals, and although I don't see the dollar making a new high, marginal high, it did, which I didn't even expect to make the high. And to give it credit, it's holding above. I don't expect it to move, but at the same token, I don't see anything changing, only because the euro comprises 56% of the cash dollar index. And with things not being settled with Italy, I think it was mentioned here is Tu-Lan Wen. She's a strategist at Commerce Bank. I've seen she's quoted quite. She said they didn't expect an appreciation, didn't anticipate an escalation in the crisis in Italy, and that may be the case. It's itself. Henceforth, until that gets resolved, there isn't a real strong reason to buy the euro. And also, they've been expecting this week and the next few weeks a slowdown. They're going to go and continue to weigh on the euro. So the dollar necessarily making an extended leg higher. You don't necessarily just seeing it selling off, because the woes with the euro in concerns with Italy, and now is if Germany, which they're expecting German growth to start to slow down, those are going to be two big key factors that are going to work as a drag on the euro. So nothing's going to change. I mean, we may see the dollar pull back, but I guess it's going to go and keep its undertone bid, because as long as things are slow. And obviously, remember the one thing that we had focused on, remember a few weeks back, was the one thing is holding the dollar up is this crude oil. When this crude oil makes a move, well, crude did eventually it broke from 71, got into the 60s, and the dollar made a move. It didn't make a move, but it made a move and then start to give it back. Well, now with crude with a firm $50 handle, well, it keeps the door open for the dollar, I guess, to gain his game. You can see a strong pullback and the woes you're seeing in the euro. Still uncertainty with Brexit. So at the very least, keep an undertone bid. I don't see a big new move for the dollar, but certainly it's going to be bid on any pullbacks. So that's my little 2 cents on there. Never expected it to stay. Everything else looks so rotten. It reminds me of what Blake used to say, a dirty, and at this point, the dollar is the cleanest shirt in the dirty clothes hamper. That's the way I see it. Like I said, I don't think it's a hanging came from the cleaners, but it certainly is the cleanest when you look at diverging monetary policy. And on top of that, concern in Europe, then the concerns also with Italy for the euro, and also the uncertainty with Brexit. Things continue to go away. It expects a robust U.S. economy, rising interest rates, safe haven status will continue to strengthen. I don't know about continue to strengthen, but I think it'll keep its under when we look at those different things that are most important. I think it's just the uncertainty with Italy. I don't think, as she says, I don't think it's going to escalate, but it's certainly not going to provide any kind of a safe haven other than, not safe haven, but any bit of good news other than, that lasts no more than a day or two. So we'll see how this eventually plays out. So let's go and move on. Italy sticks to its growth deficit plans and revamped budget. Italy resubmitted its draft budget for next year to the European Commission. Debt forecast, which Italy wants to achieve by using funds to equal 1% of the GDP from population, is to address one of the Commission's main concerns about the previous draft. That public debt would not fall as required by EU rules, but the revised budget still plans to raise its structural deficit, which excludes one-offs and cyclical swings by 0.8% of GDP. This, along with the Commission sees as unrealistically high assumptions on growth, still puts Rome on a collision course with the Commission, which is to give an opinion on the revised November 21st. So that's basically 1 week later. So until then, there's not a whole lot of impetus for the euro to turn around and take off. While boosting its privatization plan and continuing to mitigate spending overshoots, the Italian government did not change the deficit. This will likely lead to the European Commission to infringement, says Morgan and Stanley economist Danielle Antonucci. So once again, another drag. The European Commission, which has the option of starting disciplinary steps against Rome for not fast enough in the previous draft. But for now, Rome sees its public debt falling to 129.2% of GDP, 127 in 2020, and 126 in 2021. Italy keeps its economic at 1.5% in 2019. We're more bearish than the government forecast, says Morgan Stanley's Antonucci. The headline debt for next year remains 2.4%, 2.5%, and GDP for the next 3 years, along with weak debt, is unlikely to come down over 2021, in our view, said Antonucci. These things just don't go well for the euro. Like I said, I don't think the dollar's going to take off, but the dollar may end up just moving higher in a sense by default, because this is going to continue to weigh. The bigger thing is Italy is, and it is, my bigger concern is, wow, you get the 1-2 punch, the Italy and also the slow down in Germany. That is not going to bode well for the euro. Gold steady as the dollar dips from the multi-month high. There's been some stalling in the dollar. That the rise has helped ease the pickup in gold. The British cabinet will meet at 1400. Safe haven appeal has dimmed amidst market reports on the resumption of trade negotiations to avert an escalation in import duties. Though gold prices have slowed for a slight recovery, headwinds will plague the precious metal at the 1212 area. So let's go and get this out of the way here. Oh, see here, look. The German central bank warns of risk to growth. The German financial system are building up, and risk to growth have increased substantially, the country's central bank said on Wednesday, warning that banks may may have insufficient buffers. Germany's enjoyed its longest expansion since unification, but growth is now slowing, and the economy contracted in the third quarter, raising questions about the readiness of the Eurozone's biggest economy for the next downturn. The risk to future economic activity today skewed to the downside, Bundesbank Claudia Busch. The lengthy expansion has pushed up asset prices, particularly for real estate, now 15 to 30%. Bundesbank added, while there's measures to address the real estate market per se, the banks may be some collateral values and underestimating credit risk. Banks may also have insufficient fund buffers if an economic downturn is exacerbated by simultaneous credit defaults. Well, this is looking more further out, but in the very short term, we are seeing, as I said, growth starting to slow down, some concerns for business going forward. And growth here in Germany, and that'll certainly go on way on the euro. But then when you got that 1-2 punch, Italy, and then this certainly doesn't help the cause for the euro. Yeah, they were saying that the sound may sound a bit wobbly, so I may have to reach the router. I don't know. So we'll find out. Hang on. Good point though. If anybody can let me know if how the sound. If not, I'll have to go on and reset that later today. Let's take a look. So let's go and move into the euro. Everything's pretty much the technicals right now, and that's going to be the support right there, 1256. I'll try and get through this. Resistance here in the euro. Right there, you can see it, 1311. Let's go and move into. No, we're all over the map. Able. This is the big level. That's that huge one, the 3056, which if you see here, the market ran out of gas just before we, and then we made a run back up here. Same thing, couldn't get past it. Resistance can be right there. 30, you can see 33 for resistance. Support and clear with the tech 69, and boy, we're getting some pretty good swings here. But it'll be 28.69, 1 pip lower. Moving on to the Aussie, we'll go on and start with, since we have the, well, you can see the resistance right there, 67.96. We may have already had that from yesterday. We had 67.95. That's good enough right there. Support we had 66.88. I don't know, 66.88. Actually did have that here. Let's see. There's support there. We're going to give it some room, which is right there coming across 67.09. And let's go and move into the Aussie. Well, here's still that same key, 71.86, and I think we had moved it just a hair lower. Look here, 71.79, we sure did. And I still like that area right there, 71.79. That's going to remain the same. You can see the touches coming right here, 71.79. Not that far away. That would be the support here with resistance. Yes, we had it 72.40. And the high was 72.38. So I like that 72.40. So we're going to keep that on the Aussie. So no change there here on the Aussie. That remains the same. And that gets us to the dollar CAD. Well, certainly this has been impacted by the move we've seen here in crude oil, and we spent some time talking about this and how this 55.36 is 161% extension. There you go, right here. The 161% took us to 55.36, a little bit of an overshoot past the $55 handle. Takes us right here. I think that in time, over the next 10 days, we should be able to make it up here to 59.35, 36, maybe a little overshoot, maybe to almost 60, which in this particular weekend, with the dollar CAD, I'm surprised that the dollar CAD wasn't even at 133, if not even higher, in light, stretched, but in light of where crude oil's been. So at least for now, right there's resistance, 32.54. So you know your risk there. And we got 55, so that's fine. And we've got 32.02, but on this pullback, anything up here, 32, we're looking at 32.12 on a very, very short-term basis, right there. Get a little bit of bounce from here, but it comes in. We'll keep this 32.02 on the bias chart. Keep it on this. If you can get this crude oil to move there, we should start to see this dollar CAD work lower, but it's staying stubbornly higher. Hey, just one moment. Now let's go and move into the dollar Swissy. This market continues to remain fairly strong. I don't see any changes. 20 right there. And as far as support, par 68. We did go in and make it down here to par 60. Actually, just even a hair below that. So just 60, that's the risk level right there. I thought we might be able to hold it at 68. I mean, that's not very far from it. I guess we got to what, like 58 maybe? Yeah, 58. So 10 pips off. I thought we might stop right before the 60, but that'll be it. It'll be par 60. And let's go here with the dollar yen. Well, the thing, it still stands here to me, and that's gonna be your risk areas. Is 1422. Yeah, if you look on a very short-term basis, it's right here at 1398. You can easily get past that, and so I'm going to stick with it. Keep this 1422 because that's where the comes in. And we have 13.5. That's going to remain right here. There's no change. It's 13.55 here on the dollar yen. And let's go into the cash dollar index. Look at that. They came right to that 38% too. And if you look at the cash dollar index right now, got a little gravestone doji here. So not a bad area right there. Starting to see that pull up a little bit too. See, they continue to work a little bit higher here in the euro, which is translating right here on this pullback from this gravestone little doji here on the cash dollar index. Let's go and move into gold. Now we know we're gold. This key at 1197 until it breaks it. You know, they may go and try and trigger some stops, so the dollar's starting to pull back a little bit. You know, it's going to be 1197 because that's really going to work like a trigger. So we had that listed right there. It's going to be 1197. And let's take a look here. On the upside, it's going to be right there, 1204. 1204 for initial resistance. I'm going to move into the bonds. We've gone and moved a little bit higher here. We had 38.27 for our resistance. We actually got up as high as, oh, not bad, 38.28. We're backing down about 5 ticks. That's our resistance, 38.27. Just 1 tick low. You see that? We're going to keep that 38.27 here. Let the market prove itself. Right there. There we go. And for support, on a very short-term basis right here at 38.11. It's not that far away, but that's going to be our support there at 38.11. Maybe we're starting to see a little bit of a bid come in now into the bonds. Now we'll move into the bunds. And we had 60.48 and 59.89. Well, and we actually came up as high as 60.42. This whole Italian situation, I'm surprised we're not even seeing a bigger bid here in the bunds, especially with the way equities are acting, German growth, Italian situation. We're going to stretch it a little bit here. Right there, 60.55. And for support, we had that 59.89. We're going to have to keep that. I mean, Technically, that's where they want to go to if they're going to dip from here. Boy, these boons are hanging around here. Surprisingly, not seeing that much movement here. Trade really fairly quiet. But if they're going to rotate lower, that's where they're going to go to 59.89. And let's go on to the DAX. We kept it pretty tight in here. We had 11,336 and 11,487. We did come down to 308. And not bad. We had 487 and the high was 493. Certainly acting like it wants to move a little bit higher. A bit of a surprise there. That's where they want to move to initially. 11,526 on the resistance. Euro still continuing to add a little bit here. We talked about this. We've got this little gravestone doji right there in the cash dollar index. So I don't know if any of y'all are able to jump up on this euro. It's still pushing a little bit higher. On a very short-term basis, resistance would come in at 1290. Still another 3.5 pips to go. On the DAX, pretty clear where support's going to come in right there. 11,379. 11,379. Oh, we look here at the euro, probably a little bit of a fatigue. I mean, we've seen a decent bounce off of those lows, very nice bounce. Now they're starting to pick up, like your risk right here on the euro coming in right there. If you're trying to pick it up, is right there. We've already mentioned this 1256 right down here, and they're trying to prove they only get beyond that. The real test, although we've got some resistance coming in at 1290, the real test for us to move higher is right there at 1297. If we can get past that, then we'll probably have a nice short-term bottom and open the door for eventually for a challenge up in here, which would be 1252. I mean, I apologize, I mean 1352. But this will be the key test. A couple of half-hour closes above 1297. Got some resistance here, probably lay some off around 1290, but that's where the rubber meets the road right now, 1297. Probably get a little bit of a pause around 1290. Dollar CAD finally starting to work a little bit lower as crude. Keep your eye here on crude. We need to get above this 56.29. Not too far away. Once we get that, if we can get a half-hour close above, but actually we would need 2 half-hour closes. That'll probably signal that we've got a bottom. We can start trying to retrace back a bit here. Starting to see this dollar CAD weaken a bit here. Euro still on the bid now at 1287. You'll see a little bit layoff here at 1290, but where the rubber meets the road, as I said, is going to be 1297. So we're seeing some follow through on this little gravestone doji right here on the cash dollar index. There you go. Now 1287 here on the euro. Dollar yen just hanging around here. Not a whole lot of action here happening here on the dollar yen. Cable now trading a little bit quiet, but I think we had that meeting we're coming up on. It was a 1400 GMT. Gold moving away from this 1197. You can see it here on a 5-minute chart here. Made that trek towards that 1197, held just at the 1198. We're trying to move a little bit higher. And don't forget, that's the 78% of this entire move here. From 1167 to 1246. 1198 at 78. 1198 to 78%. Aussie dollar trading fairly quiet, but we have that support here for today, which was still yesterday, and as well as today, 71.79. And the target they're going to go for, you're seeing this gravestone doji here just before this 96.46, 97.46. We know that's huge here, and you can see here we got this made a run up here. We kind of stalled there, paired back a little bit. Then it was support. Now it's going to be resistance, and certainly they try and make a run up here. So you knew what your risk level was. That's where you had 97.46. We're pairing back. If we do break down, we're looking for 96.72. Okay, on the cash dollar index. Bonds, look at this. We're not there yet, but at 9 Eastern, that would be the completion of this 4-hour bar. It's the one market that I look at on a 4-hour bar because you can't see the forest for the trees with the 2-hour, but trying to form a little bit of a gravestone doji right now, but they were still a ways away from a good hour and 15 minutes away, or nearly an hour, or a little over an hour and 15 minutes away before we would form that bar. Swissy still holding its own a little bit. I wouldn't even call it a gravestone doji. We're just kind of pausing here, but support comes in here at par 60. To a certain extent, it's been relatively quiet, and everything's just moving up on the technical levels here. And there we go, 88, 89. So we made 89. We said we'll see a little bit of a pause at 90 right there. So 1 pip away and probably a little bit, but pull back. Not a bad move there from 64, actually from 63. So you're talking a good 25 pip move on that, but where the rubber meets the road is going to be right there, 1297. If we can get past this 1297 with a couple of 30-minute closes above that, that's really going to open the door for eventually for this market to move up to 1353. Probably the marks, the risk within the lead still remains, but we did, I mean, you know, it's the old buy the rumor, sell the fact. In this case, sell the rumor, buy the fact. Well, they Italy presented that budget, so there's no change. So now we know where we stand. It's a week away before the commission can make its decision, and so probably a little bit. You may be open for a little bit of a relief rally. Also, may allow gold to go on and move up here. So here's the bias chart for today. We're able to finish early. Actually, for the second day in a row, we finished a little bit early after we're always finishing late and keeping Dale stuck and waiting for me. So today's relatively quiet, all about just technical levels here. So we're able to go on and finish just a little bit early here. And thanks for joining us here on the European Crossover webinar. Good luck trading.